So many threads to pull from this jobs report, especially as we hear of layoffs or potential layoffs at some large tech companies. The latest being Tesla. Reuters reporting that Elon Musk is warning that the company will have to cut about 10%. That's about 100,000 or so employees at that company. The billionaire apparently has a, quote, super bad feeling about the economy. How is that going to impact overall hiring? Let's stay on that theme with Daniel Zhao, Glassdoor senior economist, who joins us live. Daniel, great to speak with you again. You know, the tech space has been getting a lot of attention because even though the headline numbers tell us that in the aggregate, the U.S. economy is still adding jobs, you're hearing these anecdotes of these large tech companies doing these layoffs. Are you seeing that in the data so far, at least either from the Glassdoor perspective or from the BLS reports?
Not really. So that's the short answer. When we look at the jobs report, we see that tech sectors like information or professional and tech services have just seen steady jobs growth in May. So there isn't really any signs of hiring freezes or layoffs in that data. When we look at Glassdoor data, similarly, overall, the picture is pretty healthy. We do see that there is an increase in concerns from employees. So when we look at business outlook ratings from employees, those are actually at their highest levels since rather at their worst levels since the pandemic began. But at the same time, for tech workers, that's about 16% negative. So that's a pretty low number. So overall, I think that in the tech sector, we are seeing concerns. We are seeing employees report that they have these concerns about layoffs, but it's not yet showing up in the aggregate economic data.
So I asked this question to Allison just now, but is there anything in this May data that shows you if there's a changing dynamic in the power between workers and employers? Because it's been favoring the workers so far. They have options to choose from. Do you see that weakening as the Fed raises rates and perhaps takes some steam out of that?
Not yet in the May report, because we do see that the labor market is very healthy. We know that job openings, even though they did tick down in April, are near record highs. Layoffs are near record lows. We did see wage growth come down a little bit. And so if you're really searching in the report for evidence that maybe there is a shift in the balance of worker power and employer power, that might be something to point to. But at the same time, it's still pretty strong. And overall, I think the labor market holistically is very healthy and is still tilted towards workers.
So I don't want to get too deep into labor market economics, but what's really interesting about what we're seeing here is just the matching is a little bit different in 2022 than it was in 2019. I understand that you've been looking at just the amount of interviews and the way that they're being done in 2022. We saw a big uptick in the amount of people that were doing job interviews remote. That has kind of stayed the same through this pandemic recovery. Do you feel like there's any pandemic-led shift in the way that people are looking and getting recruited for jobs?
Absolutely. The in-person interview isn't dead, but the remote interview certainly is here to stay. That is something we expect to see continue even after the pandemic, and is something we have been seeing in Glassdoor data so far during the pandemic, just because remote interviews are much more convenient, they're much cheaper, and that's true for both the employer and the employee, because now you don't have to fly out a candidate to an on-site interview, but at the same time, that candidate doesn't have to take off time from work. They don't need to pretend to have a dentist appointment in order to take an interview. So to some extent, that might actually make the matching process a little bit faster, which would be a nice change to the labor market. But at the same time, that might also reduce retention because it makes it easier for employees to actually go look for another job while they're on the job.
The dentist's office is one of the classic rules in the book. Hey, I want to ask, though, is there anything lost from those types of remote interviews? Is there anything that employers on their end are saying that, like, okay, well, we can only do this, or this would only work if we're also recruiting these people for remote jobs? Are they still trying to stick with in-person roles for people that are eventually going to have to come into the office? Or are people saying, you know what, it's actually fine to do these Zoom interviews. We don't necessarily need to fish them in to get a good feel if they're going to be a right fit?
I think employers are still trying to navigate this new world of work where some jobs are remote, some are hybrid, and some are in person. They really haven't figured out what the right mix and what the right way to approach culture building in those contexts are. So certainly if an employer is hiring for an in-person role, they're probably going to want to have an in-person interview at some point in the process. But even if not, like, I think in-person interviews are still a way for employers to help show off their culture, show off their workplace, and really give candidates an impression of what their experience in the actual job will be, even if they do end up working remotely. So I think a lot of employers are very happy to use in-person interviews as an opportunity to actually show off and impress candidates.
And then last question I want to ask here is just about different demographics that are often overlooked in the aggregate data, and want to talk about the LGBTQ plus community. There's been some interesting research just about worker dissatisfaction among that particular group. It's oftentimes lower than the non-LGBTQ plus types of demographics that have been surveyed. They have lower ratings of the comfort level that they feel at the workplace. Is there anything about that that's either a dynamic of kind of the turnover that we're seeing across industries among LGBTQ plus people? This is obviously something that a lot of people are thinking about in this day and age and trying to keep and retain employees.
Yes. So when we look at Glassdoor data, we absolutely see that LGBTQ plus workers are more likely to report being dissatisfied with their workplace, with their employer. And that's something that is, of course, in part due to factors like discrimination. So LGBTQ plus employees are more likely to report discrimination in the workplace, and they're also more likely to report burnout in Glassdoor reviews as well. So I think there's an element of it, which is just LGBTQ plus workers have been particularly impacted by the pandemic and the changing workplace as a result. And the other element of it is that we actually see that service industries are more likely to employ LGBTQ plus workers. And certainly those service industries have been hardest hit by the pandemic.
Daniel Zhao, Glassdoor's senior economist, thanks so much for the breakdown. Have a great weekend.